Welcome to the third of my videos looking at the Association of Accounting Technicians Bookkeeping Controls Assessment. This task asks us to, or part of the task asks us to record an irrecoverable debt. So in the example we've got here, a credit customer, Jensen Limited, has ceased trading, owing Russell Hardware £1,120 plus VAT. So that's not including VAT, that is plus VAT. So we've got to add VAT to the amount. So that gives us a clue there in the question that that is the net amount. So the question asks us to record in the journal, okay, the entry is needed to write it off in the general ledger. So the first account we need is the irrecoverable debt account. We need the VAT account, because we've got, it says there, plus VAT, there's a clue. And then we have to figure out which account we need in the general or main ledger. Okay, and in this case, it's this sales ledger control account because it's a customer, a credit customer that we're writing off, the ceased trading. So in the amount column here, we figure out how much each account has to be debited or credited. So we were told the irrecoverable debt is the £1,120. We're told we've got to add VAT to that. So if we get on our calculators, £1,120 plus VAT, so times 20%, gives us £224. So the final entry is going to be the total of those two figures. So it's £1,344. So thinking about it logically, the irrecoverable debt has to be written out of our accounts. So we've got to debit that. It's an expense to reduce our profit for the year because that's money we've lost. Okay, the goods have gone. We've not got the money for them. The VAT we can claim back from HMRC. So originally when we sold the goods months ago, okay, to Jensen Limited, we would have credited the VAT account. VAT accounts under the normal VAT accounting scheme are the VAT return is submitted with any money to HMRC every 3 months. Now, to record an irrecoverable debt, it has to be at least 6 months old. Okay, and there's no chance of getting that money back. So in this case, or in any case, you can claim back the VAT. So we debit the VAT account, and we then credit the sales ledger control with the full amount. And again, thinking about it logically, if Jensen Limited had paid us the £1,344 that they owed us, all we'd have done, the double entry bookkeeping, when that money came in, we would debit the bank and credit the sales ledger control in the main general ledger. Okay, and all we're doing here now is writing off, we're putting the irrecoverable debt, including the VAT, onto the same side as if we'd received the payment to write off what that customer owes us. So I hope that's explained irrecoverable debts and will help you now complete this task in the assessment.